Morning, everybody. A little bit of later start today. Welcome to my channel. Yesterday, of course, FOMC, wild day. There was a pause as expected. That pause was expected. So we did move higher than the previous day. However, the Fed talking about tariffs could cause more inflation. It's causing a lot of those gains yesterday to be taken right back. So we might be going back to balance here. We're still going to be getting a big move, but definitely the market tried to break out yesterday, and right now it's not being successful at it. All right, so we have initial jobless claims today. Now tomorrow is quad witching. I explained this before, but tomorrow is index options expiring, futures contracts expiring, futures options expiring, and stock options expiring. It's a very big day. A lot of money is going to come off the table, so that's important to look out for tomorrow. Okay. Now, hopefully you guys can enjoy me. Join me every morning while I discuss the news, what's going on in the markets, give you long and short trade scenarios, give you the leaders and the laggards, the economic news, just give you the 411 on what's going on with the markets. Okay. Now, if you enjoy my content, you can smash the like button now or later. Okay, that would be awesome. Okay, and without further ado, welcome to my channel. My name is Steven Gonzalez. I use market profile and volume profile for structure in the market, along with supply and demand, gamma exposure levels, and the most traded price of the year, the month, the week, and the previous day. They all are just my edge. All right, how I choose to look at markets. All right, it structures it in a way for myself that's very easy. I understand volume profile, market profile might be not easy on the eyes at first, but I hope to change that. All right, because everything I have on my charts get reactions, and that's important, right? So, without with that being said, why don't we get right into the futures watch list here and see what's going on with these markets. Now, like I said, initial jobless claims will be dropping in a minute. All right, so we got the VIX is up 3.42%. 30-year bonds. See, this is just interesting. This morning, 30-year bonds are being bought. Yields are going lower. So there's a little more fear in these markets. Okay. The dollar is up 0.41. Crude's up 0.16. Gold's up 0.15. Bitcoin down 0.22, Dow's down 0.39, ES down 0.44, Nasdaq down 0.57, the Russell is down 0.70, and silver is down 0.85. 10-year yield, look at that, down 1.62%. Okay, we'll be looking at that later, that chart. Ethereum down is 2.04%. 2.04%. All right, let's look at the Mag 7. All right, there's no leader here. No, nothing is up pre-market. Okay. Eli Lilly flat. All right, let's go to like over 50% at least. Netflix down 0.55. AMD down 0.57. Coinbase down 0.6. Well, that just moved on me. Let's go back to Broadcom down 1.19, and Tesla just can't seem to catch a break, down 1.34%. Okay, I did see there was a price target cut on Tesla this morning. So let's maybe we can see that here. Okay, well, not there. All right, moving on. Jobless claims dropped. I don't see any much movement in the markets that reflect that it's caring about it too much right now. So let's go to sectors. All right. So interesting, right? Nothing is up in sectors either, right? But the flat is staples, energy, utilities, real estate. These are defensive, right? And then you have the laggard is semis down 0.57, technology down 0.40, financials down 0.30, discretionary down 2.27. Okay, and that's what's going on with sectors. All right, now We're going to take a look at the economic calendar. We'll look at those jobless claims numbers. Let's take a look at those. All right, let's take a look at these. So jobless claims. Let's see. Expected 224, got 223. That's why it's a nothing burger. Philly Fed. Yeah, it really didn't do much. All right. Existing home sales at 10 a.m. That's today. Tomorrow it is squad witching, but you had Fed Williams speaking. Okay. Let's look at some news. Let me just refresh this. We'll go to some news here. All right. U.S. companies race to secure import tariff exemptions after Trump pause. Washington's temporary relief for import tariffs on goods covered under the U.S. Mexico Canada agreement has triggered a spike in U.S. companies seeking exemption under the trade deal. It says preview Nike to post worst revenue fall in 5 years on stagnant demand. Nike is expected to post its steepest revenue decline in nearly 5 years in its quarterly results on Thursday as its new products fail to open the wallets of Americans. Wow. Let me just look at Nike. I'm just going to look at it real quick to see exactly. Okay. That's weird. Just give me one sec. I just want to see what Nike's doing. Pre-market. Huh. That's interesting. It's like flat. So, interesting. Moving on. Let's see here. SoftBank buys chipmaker Ampere Computing for 6.5 billion. Eli Lilly beats Novo Nordisk to launch weight loss drug Monjaro in India at $50 for 5 milligrams vial. So Eli Lilly with that news is flat. That's flat. Let's see here. Just trying to see any big news. So it says Nvidia plans to invest hundreds of billions of dollars in U.S. made chips and electronics over the next 4 years. The Financial Times reported on Wednesday, quoting CEO Jensen Huang, the company expects to spend around a $500 billion on electronics during the 4 year period, according to the report. I think we can easily see ourselves manufacturing several hundred billion of it here in the U.S. Interesting. Tesla, the company is recalling, so this is like not good for Tesla, obviously. The company is recalling 46,000 Cybertruck vehicles in the U.S. to fix an exterior panel that could detach while driving, the latest in a series of callbacks to the pickup truck since last year. The recall is over issues of the cant rail, a stainless steel exterior trim panel, delaminating and detaching from the vehicle. It said as a remedy, Tesla servers will replace the rail assembly free of charge. A detached panel can become a road hazard. I did see this on I don't know if it was Instagram or some reel where somebody showed this panel hanging off. So let's see here. See, it says Fed's balancing act gives respite to tariff-struck investors. Investors are taking some comfort from the U.S. Federal Reserve wait-and-see approach after being rattled by tariff-related turmoil that poses a threat to markets and economy. So General Mills got a price target cut here. Let's say Microsoft. Let's see. Scotiabank initiates cover with sector outperform rating. Type price target of 470. All right. So that is your news. I was thinking I was gonna see Nike's earnings here. That's okay. Let's look at the juice. Just trying to see anything here. Nothing really here. All right, let's move on to the daily charts. Let's pull those up. Here's your good old SPY. Okay. So again, like I said, that trend line here. Now look what happened yesterday, right? You tried to break last week's range. That was last week's highs, right? We came up the other day, failed. It came up again, failed. Okay. So you got this kind of like push up, push down, push up, right? And now we are at 564. Let's call it 80. 564.80. You're in the middle of yesterday's session, pretty much. Probably a little on the lower end of mid. So there's just a lot of uncertainty in these markets. Okay. That's basically what this is showing us. Let's look at futures. You can see now in futures, okay, you got one, two, three wicks up here and got almost equal wicks down here. Now remember, these are 24-hour bars, but so we had this little balance, right? Broke out. Now we have another balance forming. So that's what's going on in futures, right? You can see the 90 EMA daily starting to flatten out. Just means that we're going sideways. Okay, so that's that. Let's look at the Qs. Here's our Qs. Okay, you can see bounced off the 2024 anchored VWAP. All right. Now you can see there's a large balance area forming. You had a little one, broke out. Now we have another one, like I just showed you, right? Look, tried the breakout of last week's highs. Reject it once, reject it twice. So I think this market, it just doesn't know. It wants to rally, but then there's news of tariffs. There's just so much uncertainty in this market. Okay, we are at 478. It's called 478.20 right now. We're right about here. Like I said, mid part of yesterday. Let's look at futures, how they shape up and look. Now you don't have those equal, but you still do have a balance area here, and we're right here, like in the middle. Okay, so it's turning out to be a just huge balance area. We are going to move from here. It's a matter of the timing. It's the matter of the when. Okay, that's your QQQ and the SPY. All right, now let's look at the triple-headed monster. That's your bond market, which is taking a tumble this morning. Remember I said, can this be the swing high? This level up here, about 4.357 yield. Was that going to be the swing high and we continue to trend lower, right? So let's put a trend line on this. So there's your primary trend line. You got a secondary trend here, right there. Okay. So you can see here, we got a primary and a secondary trend line, right? And let's see if we have any trend on the upside here. Let's put it here. Let's connect. Let's just see. So you got one here and here. Okay. Those are the trend lines on the 10-year yield. Now, the important level here, we're going to say, is the 4.13 yield again. You can see it was right here, came right down here, and look, we tried to break it once, tried to break it again. Now, is this the third time the charm, and we break down to 3.99, to basically 4% yield? I don't know. But it is something to pay attention to, that the yields are going. People are buying bonds. Okay, usually they're buying it because it's safety, and it's still, for a 10-year you get 4%. So moving on to the dollar. Now the dollar's been bottoming out here, but it's got a little rise today, right? But you can just see, if we want to really just look at this right here, you can see this level here and this level here, right? We were ranging here, then we broke out, right? Then we took a downturn, and now we're ranging again. What happens? Don't know. Okay, don't know, but you have to pay attention to that dollar. Now, a weaker dollar is usually better for companies in America because, when they export stuff, it's not as expensive for the international companies that we export to, and then that looks better with your balance sheet. Okay, because the higher dollar is not good for equities generally. Okay, All right, let's move on to your VIX. Now your VIX has come down. We're almost at 30 here. We come down. We're getting a little more push up a little bit today. We closed down here yesterday about 1989. We made a high just recently about 21. So this is generally still some fear in that market. Okay. And what's happening this morning is really just a telltale sign of like this market just doesn't know what to do. They want to rally, but then I think it's like, we're probably going lower. Who knows? Right? Who knows? I think it's ready. We're time for the main event. I'm going to show you first my hourly chart. Okay, give me a sec here while I pull this up. Okay, I'm just going to show you what we've been doing. Okay, and you can see two important levels here. What I'm going to show you. Okay, let me pull it up for you guys. All right, give me one sec while I put that up for you guys. Okay, there's an hourly chart. So, hourly chart checkup. All right, and we're going to get my marker out. Let's mark this bad boy up. Okay. All right, what have we been doing? Now, what I like to do is put anchor VWAPs at special place, not important places, right? Important places on the chart. So here's the recent low, right? And I put an anchored VWAP here. Notice, right? This has been tested where right here, but we couldn't really close below it. Ripped up, right? And guess where we hit yesterday? The month to date VWAP and this supply zone. But notice how we couldn't close above the month to date VWAP. And then what ensued was selling, right? And look where this anchor VWAP from those lows are right here from ultimate balance. That big level, 56.70 in futures. Okay. So look at the move up, come back to balance. Look at the move up, came back to balance. This is very indecisive market. Okay. You are holding above this level, which is bullish, but two attempts higher, I don't know. I think if we lose, obviously this monster level, 56.70, and the anchor VWAP from these lows, right? You could really start to push down. Okay, this is last week's lows. Really start to push. Okay, but I don't know. Nobody knows. Right now in the Nasdaq, so that's the ES hourly chart, right? Now in the Nasdaq, let's look at the hourly chart there. Now the one difference with the Nasdaq here is the Nasdaq actually did break the VWAP. So here's that anchor VWAP from the lows, right? And we did push through it, and you can see right here you were under it, but then we went over it. Look at that, held it, went where up to where? Month to date anchor VWAP and this supply zone. And then we tried to rally and sold off where? Right to this anchored VWAP from these lows. Okay? And from this big most traded price of the month level. Okay, so this is ultimate balance in here in the Qs, in the Nasdaq. That's ultimate balance. Price is in the middle of that zone right now where the most traded price of the week is and the most traded price of the month is. Okay? So, like I said, it needs to hold above this anchor VWAP. Very important. Okay, and it's actually right at the week to date anchor VWAP is right here. Now, if you start to take out this support here, boy, you're going to break this VWAP and you're going to test last week's lows. Right? I mean, two attempts now have been shut down. And you hit the month to date anchor VWAP once and you hit it again and had selling. right? So that means this month sellers are still in control. Okay, unless you could take out this month's anchor VWAP, that would put anybody who sold in March underwater, but still they're in control. Now, conversely, right, from these lows, buyers are in control from this low. So if you bought, the average buyer from this whole move is getting paid only a little bit right now because we're right at it. So just crucial to really look at these. And why I love the use of anchored VWAPs is it's not like a moving average. It's based on the actual contracts, the volume, right? It's not objective. It's just accurate. It's a direct representation of what's going on. It's not disputed like a moving average. It's actually based on price and volume, right? So it's really, really important to have those on your charts. Okay. Now, with that being said, we can look at the market profile, volume profile. All right. So we're going to switch over here. Just give me a sec while I switch workspaces here. All right. We're going to look at the ES. Okay. Here's our market profile and volume profile. And let's look at it together. All right. So first we're going to do is we're going to look at yesterday. Right now, generally I have no edge on FOMC days, even though the trades that I wanted to take would have worked, but that doesn't mean anything, right? I talked about this earlier, pre-market, right? I was just very just patient and sitting back, and I was like, um, so which was interesting is we opened, pushed down, right where ultimate balance, right into this level. It held, and the market was fairly strong. Okay, and then what happened was it pushed up, right? Pulled back, actually to the week to date anchor VWAP. Had a nice move up, and then de-risked before FOMC. Okay, and then boom, you got that big move, right? And then we closed right there. Big move up, and then that got sold into, right? And then you close right here. But price is here right now, right? It's almost at by the open of yesterday, so it's pretty much like a nothing burger right now, right? The jubilation, the any kind of oh my God, we're finally getting the move. Um, it's basically like we're back to balance. Okay, anybody who was long yesterday is not liking seeing this. Okay, now I had some positions on yesterday, and I'm like, you know what? One in particular was Bank of America, and I was like, you know what? I just want to play defense. I'll take my profits. And of course, it would have hit my target before FOMC. And that's just the breaks, right? And then I was like, should I initiate any positions? And I said, you know what? No. No, 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 no. You don't know what's going to happen the next day. And I had one mentor that told me he takes the days off on FOMC. He's like, I have no edge. I have no interest in trading FOMC. That's a day off for me. His stats say that he's just not successful with those days. And he basically, when I was in his group and I was one of his mentees, I guess, he would take the day off. So it would be a day off, right? And he always said the real trade is the day after FOMC because that's really what you get to see what the market is going to do. And now look, we were all the way up here. It looked like we were just going to break everything, and we're back, right? So we're back. And look at this now. We got very key levels to look at, right? Overnight session, overnight high. It's pretty much at month to day VWAP. Yesterday's high, yesterday's low, overnight low, almost equal. Okay, so it's all about the overnight highs and lows and yesterday's highs and lows. It's pretty much, and you have double distribution. You have volume um, that was. Let's look at the price action. Let's look at the price action of the overnight because you have two distributions here. All right. So okay. So look what happened early on in the overnight session. You opened up and you started to charge higher, went right up to the month-to-date VWAP, and then boom, you took a dump. Right? You dumped. Price dumped, and now you're consolidating around here. Why the most share price of this session is down here. Okay. So interesting, right? And we're consolidating here. And if we zoom out, right, this is a weekly profile. So we have excess and we have value. And guess what? We have an incomplete profile to the downside. Now, this doesn't predict, but you have a bearish imbalance to this profile. Okay, what I mean by that, a distribution, right, a bell curve is even distribution. And that's actually, I think it's like 68.3 is the standard deviation. So that's why they call it the value area. So it's roughly 70% of trading happens in value area. Okay. And we have access to the top. We don't have access to the bottom. It's kind of incomplete. So if we were to have a completed profile, it would look something like that. And sometimes that means price has to come down here and complete the auction. Okay. If you want to look at it another way, from one of my mentors, his name is Josh Schuler from Trade with Profile, right? Look at the participants. If you want to look at participants, right? He called this the slope of hope. And what's happening is you're running out of volume, running out of volume, running out of people, running out of participants, running out of participants, right? And price is here. And we know 56.70 is the most traded price of the month and the week. So it's all about this level. Because if we break and hold this level, we're probably going to do one of these and make the profile complete. Okay. And what's beauty about the profile, right, is I can just look at it and go, all right, there's a bearish imbalance to the downside. And if you just looked at the chart, right, why is that? Well, look, this 56.51 has been support right here, right? Came up, down to it, and then boom, we went up, right? You didn't have much price discovery lower since this day. So now you have a big level there. Okay, let's call it 56.51. Kind of lines up with this. Lines up with this level, right? So very simple today. Very, very simple. Right now, you're kind of at a chop zone, right? Anything in the middle of these, like this area, you're looking for trouble. Okay, you're looking for trouble. So the levels here are very easy. You have a supply zone with month-to-date VWAP, yesterday's highs, overnight lows. You have down here, you have overnight lows, yesterday's lows, the 56.50 support, and the 56.70 ultimate balance level. That's it, folks. That's all she wrote. So very simple today. I'm going to get right into the scenarios, okay? Right into the scenarios. Alrighty. So we're going to start with the bull. Because right now, even though they gave back these gains, as long as the bull's price action stays above the 56.70, that is going to be looked at as bullish. Okay? That is going to be looked at as bullish. And the market's going to try to bring this most traded price of the week higher and higher and higher, and then you get higher prices. Okay. So number one, what I want to see, this is the week to day VWAP. Where that is, this could get taken out easily, and then we can move higher, right? But so in a bullish case, this is the most traded price hit overnight. Okay, so we could push down, hit overnight lows, hit yesterday's lows, and this is the important level. And what I mean by that is, do not look at price action if we do this and then this. That is bullish. That's a bear trap. Doesn't mean that happens, but that's one, right? So just to let you know, we could see a bear trap. But what if we just come in here, 56.70, and we do this? Lower high, lower high. Well, you got shorts from here, right? You're going to start to work yourself way up. If you go through that most traded price of the overnight, it's going to lift even more. You have single prints here in this profile, thin volume. You're going to get fueled up to test this area again, month to day VWAP, okay, in this supply zone. And you have to see what the market does. To be bullish, the market needs to take out the supply and start to accept price. And then it could possibly move up to 5,800, okay, and test last week's highs, which is 58.10 in futures. To me, that's all I'm going to look at today, is this area for a long. Because if you lose it, then I don't want to be in a long. Now remember, losing it means accepting it below it. Okay? So now, if we go to the short side, okay, short side, here's price. Okay? Couple things can happen on the short side. Number one, if you drive, right? If you drive, this ain't going to be easy. If you drive, take out yesterday's lows and you break the 56.70 ultimate balance level and you start accepting price lower, right? Right at the 56.51 level, remember we talked about that, you're going to dump and go lower, okay? Where? I don't know, but possibility could be all the way down to last week's lows. That level is 55.61. Okay, that's last week's lows. Okay, so last week's range, just to let everybody know in the orange, is here and here. That's last week's range. We're still within last week's range. Okay, so that's like one. If you see that, I'm gonna be like, ooh, if we start accepting price below this, I'm not in any gonna be excited about any longs unless we take this out and go back, right? So another thing can happen. Push up to these single prints, come up here again into the supply, into month to day VWAP. If we try to go out of here and we fail and go lower, well, I think we go down again and we might balance off in here. I don't know if you have the power from this point to take this out and go all the way down. Doesn't mean it can happen. I just don't think it's realistic. That's really all I'm looking at today. That's really it. Everything else is noise. Okay? Everything else is noise. So in here, for me, is noise. Okay? That's going to trick you. You're going to stare at it. You're going to think there's something, and it's noise. Okay? All right. So that's your ES. Let's get over to the NASDAQ. I know I'm running late. Okay, let's look at that NASDAQ together. Let's bring this chart down. Same profile, but it has a bearish imbalance to the profile. Look, excess. Look, there's the slope. There's the slope, right? Then you have the most traded price. Now, this is the most traded 197 is the most traded price of the month. Okay, most traded price of the month. Right here. And then you just have this little bit of excess here. That is not an even distribution. That is not a completed auction. Okay, what would that be? That would look more like this. So this 197 level is very key. Okay, and you have this level lines up right with the yesterday's lows and the overnight lows. All right. So right here, this is pretty much ultimate balance in a 24-hour session, 197. This most traded price of the week moved up yesterday, but this is still the price, 197. And you're in kind of like a little bit of a chop zone here. All right. So right here, you can see prices pushing lower right now as we speak. So this is the area bulls want to defend. All right. The next area, just like the 5651s and ES, is the 119, 196.34. I mean 196. Let's call it 196. This area. That's support that you don't want to lose in the Nasdaq. Okay. And then up to the upside, we have yesterday's highs, month-to-day view of supply zone, and we have still the most traded price of the overnight up here. Right now, this has been taken care of because these were longs and then we dumped. So they've been taken care of. So this is the playground. This is it. Okay. And now you can see down here, last week's lows, 193.44, right there. Last week's highs, all the way up here at 203.60. Okay, that's last week's range. Look where price is in the middle of last week. In the middle, right? So let's talk about scenarios now. All right, we got to go over the scenarios. Pretty much similar. Obviously different prices, but very similar. All right, we're going to start with the bull case. Okay. Now, like I said, bulls just want to defend this area. Okay. So any movement in here, in this area, right? And remember, this level means you have to find acceptance below the level. If you just do one of these and do one of these, hold, that's bullish. And you can go up and test. Okay. That would be a bear trap. Okay. But you could also, just like I said in the ES, come nicely down to this level. Maybe take out yesterday's lows, hold lower high, and start to make your way up. Okay. That's all I'm interested as far as a long. Okay. Now remember, if this market's super strong, I might be interested in a pullback. But generally, I would like to catch something here. Okay. Now, let's look at the bear side. It's going to be similar stuff that we talked about earlier. Now remember, if the price comes down here, takes out this level, and comes down here and starts to accept value price down here, you're going to move most likely to 193.44. That's last week's lows. Any price acceptance lower is not good. Okay, now why is that not good? Because you have longs. Look at, I just want to show you guys why that in that profile shows it here. You have longs, right, that are getting paid. Now here they took a little dump, but look, got paid, and now look, all these longs have not been hurt. If we come back down here and reverse it, oh boy. Okay, so this is one if we just smash through the level. Okay, now what could happen also is this is a high volume node here, this most traded price of the week. You could come up here, struggle with this, fall, then dump. You could also, if we're going to stay in balance, if the market moves up swiftly back up here, hits month-to-day VWAP in supply, you have to see what it does in this area. If it does a wick and then we start to fall, we could just fall right back into balance. Okay, so there's a very clear plan here. All right, hopefully I'm conveying that. Is executing this plan easy? Hell no. So I know what the market will do, right? Like I have a good feeling of what I see, what will happen. However, executing it, right? Having the right risk, the right stop, you might mistime it. That's why trading's hard. Okay? That's why trading's hard. Because I've been in so many trades that I'm like, there it goes to the target I wanted, and it maybe stopped me out by a tick. And I'm just like, wow, that's what I wanted and what I thought would happen. But that's what makes trading hard. Okay. Now that's the analysis for today. All right. Hopefully you enjoy that. Smash the like button if you did. All right. And as always, I hope you guys join me every morning. I give you the news, I give you the story of the markets, the long and short trade scenarios, and just hopefully you get something out of it. Okay. Remember the anchored VWAPs and the hourly chart I showed you earlier. So that's the name of the game right now, right? Who's in control? And right now, honestly, nobody. Nobody. This market doesn't know what it wants. And when you're in a Trump regime, right? One headline, one word, one something, tariff this, tariff that, can erase gains, erase losses. It's just crazy. Okay? So with that being said, everybody enjoy the rest of your day. Remember, no trades are trades. Stay green, and I'll talk to you guys tomorrow.